So, we're very honored that you've taken time out. And, Salman bhai, last time you spoke, one was in the middle of the financial crisis where everybody was very pessimistic, but you were far more optimistic, and that played out. And then we spoke right after it, where again you gave some really good calls both on the market as well as on commodities such as oil. So with that, um, I'm sure the audience as well and people in Pakistan always ask me that, what are you thinking now? How do you see the markets, especially now with the new government coming in the US fairly soon? Um, what, how should people be positioned, both vis-a-vis stocks and other commodities? We get a lot of questions on gold, on oil, and now starting to even get on Bitcoin. So, how do you see the investment world changing? So with that, a lot of questions, but over to you.
Oh, thank you very much, Ali Bhai, and thank you for your generous introduction. I don't know about reading the markets. It's all of us are students of the market, as you know. But I guess I can share a few points on how we are thinking about 2021. 2020 itself has been an extraordinary year, as we know. So complete shutdown in the global economy, and then the stimulus which came out to prevent a complete collapse, right? And we see severe dislocations, especially in the macro space, which are going to play a big role as we go into 2021. And I'll share some points on that one. So if I were to summarize at the top level, 2021 is virus versus vaccine. I mean, literally, it's going to be on that one, because right now the virus is intensifying quite a bit. We have a double dip recession in Europe, and most likely in the US as well. So I think Q1 can potentially be negative. But beyond that, the vaccine news has been unequivocally very positive, especially on the efficacy ratios. And that does mean that once the vaccine is deployed, high contact consumption can resume and can resume fast. And then those sectors which are being priced at a lot of depressed valuations can start to see support. So that is the rotation angle which a lot of people are talking about in the market, and we saw some ferocious rotation in it from growth to value, especially on when the first vaccine announcement came out. So we do see 2021 as a year of rotation. But it's not going to be a straight line going into it. I think we first have to pass through this recession, which is imminent. And more importantly, we'll also have to find out how much fiscal policy has been important in supporting the rebound. And this is the point I was making about 2020. I mean, a lot of people think that, yes, Amazons of the world and Facebooks of the world are perfect stocks. And they have done completely very well. Stay at home stocks, for example, or non-COVID stocks. But we should remember, how are these companies making an earning when the economy is shut? It's really by the government. So in the US, for the lowest two cohorts, the income replacement done by the government was 145%. So for every $100 lost, they were given $145. So the personal income in the US is actually up double digits year on year, despite the fact that private income is down on a year-on-year basis, and the difference is government. So going forward, I think the government or the fiscal support is going to be important to keep this dynamic in place. Yes, we have got a lot of savings now by the household sector because a lot of that income has been saved. So the critical question going forward will be if this household sector will run down that savings more broadly than the 2-3 companies we all think about, right? So that is a critical, I think, shaper from the macro side, which is that, how if you're thinking about the sectors. So the key thing is that as the economy opens up, as the vaccines are deployed, which are really 21 H2 story. So second half of 2021 story. Then this very big saving buffer in the household sector, how does it get deployed? So the consumption basket has to become broader for the value rotation to take place. So that's something to keep in mind. And then in terms of risks to that, everybody in the market right now on the street is quite bullish on 2021. So big pickup in growth, especially in the US by some of the key big banks. Consensus global growth is around 5% with upside risk for most of the players we look at. Our more assessment is more balanced. We think the immediate risk is quite strong, so you will see contractions which are serious, and we are starting to think that market may be a little bit in the short term ahead of itself. Having said that, that doesn't take away from the medium term view that the consumer will have a bigger opportunity to spend their savings as the economy opens up. So that is this virus versus vaccine tug of war, which is potentially going to get played, I think, the next few months and going into 2021. Where I do see risk is that everybody is saying that the economy will open and this is going to be the path. I don't think we're going to get there in a linear line. There are issues of distribution. There are issues, more importantly, in DM world. There are issue of willingness to take the vaccine. So Ipsos surveys show that only 50% of Americans are willing to take the vaccine. In India, China, Pakistan, that would be like 80-90%. So and there is a big willingness to take the vaccine issue in Europe as well. So there is this issue we have to be mindful of. It will only appear once these vaccines are there and we see the uptake numbers. So one statistic I was looking at in the US is that 60% of nurses don't want to take the vaccine willingly. So that's a nuance which is going to be as critical as the vaccine, because you can have the best vaccine out there, but if people don't take it in big numbers, then we have a trouble. We still have a problem. So that's a key risk factor we are watching. Overall, we are a bit more on the cautious side. But we do see that the value rotation can take place once we have more confidence that the economy, DM economy, can open. The other point I would mention on EM is that there is a lot of obviously focus on when the vaccines will hit the EM world. I can tell you that's not going to hit the EM world anytime soon. So all the major vaccines you are talking about, they are already taken up by the DM world. And it's not clear from G20 communication that they are willing to release it to the EM world that quickly, because they are oversubscribed by G7 countries, all the major vaccines. So one argument is that you give it to the elderly and the vulnerables everywhere. I don't think that's going to happen. I think it's going to be the DM world gets inoculated first, and then the EM world comes in. So that's something to keep in mind as well, especially on the vaccines which are coming up in the US and Europe, while China may be the other one on the other side, which may be interesting from an EM perspective. So we are creating some heterogeneity there, which is that some countries will struggle to get vaccine in 2021. And given the fact that G7 has oversubscribed most of these vaccines, and there is probably no indication that they will give it to EM that quickly. So that's something to keep in mind as well as you're thinking about EM. So it's not a uniformly positive story for every EM. It really depends on your issue of how strong the impact of virus has been on the economy, and B, when do you think the vaccine will hit, or credible vaccine will hit the system before restrictions can be eased, because otherwise you will still see waves of virus and lockdowns or smart lockdowns to come through as we towards the year. So I'll leave it at that. But if you have any questions, any comments, I'll happy to share thoughts.
No, that's very interesting and slightly scary as well. As you said, that it's a race between vaccine and the virus, and if emerging markets will not get the vaccine on time, then probably we are talking about what's the time horizon you're talking about? You think that by which a credible vaccine can reach EM or Pakistan for that matter?
I think that's where the geopolitical angle is important as well, because the vaccines are being developed in different major countries, right, including the EM, like China is obviously this doesn't get a lot of attention in as you know, in the Western media, but that's where the the second layer of progress is being made. So the geopolitical angle is important. The second angle is that if you are looking at the current vaccines which are coming through, I don't think if they hit like in a big mass way in 2021 H2, because you still have a safety period of 1-2 months, by the way, on the current announcements, then you are looking at 2021 H2 for DM world, and you're easily looking at somewhere in 2022 onwards that EM starts to get a mass vaccination program, because remember that few people having it is not going to help. You need 60-70% of people to have that vaccine to be effective in terms of herd immunity. I think the good news is the AstraZeneca news, which is the distribution parameters of that vaccine are quite positive for EM, because it needs a refrigerator, right? It doesn't need -70°C storage, which Moderna and Pfizer means that, frankly speaking, it's so expensive for EM world that they're probably not going to even touch it. So you can get the vaccine for cheap, but you will just waste it, right? Because you can't distribute it in a credible way. So the AstraZeneca news is a good one in that front, but again, it's a queue, unfortunately.
What about and then moving to the U.S. government with Biden's victory? Do you see any change in the U.S. fiscal policy? Because as you said, that has been the main driver for earnings growth, the money pumped or the money distributed by the government.
Look, we are of the camp that we are not going to see a fiscal bridge before the end of the year. I know there has been some talk over the last couple of days whether a bridge can happen. If they go with a 500 billion program, which is, by the way, much lower than what the market is expecting, I think the market expectation is that at least $1 trillion will come in. And then we do have a problem, because if that is the program and they are done with it, then early next year, when you have a Q1 recession and you need a bigger top up, the polarization really stops it from happening. I think ultimately a fiscal will come, because if death rates go up, hospitalization rates go up, it's easier to bring a consensus. But right now the situation is quite polarized. And we are watching the situation carefully, because it is quite important in making sure that the bridge is there and the consumer feels confident to keep on spending, because this is going to be a depressing winter for a lot of people. And however, at the same time, we know that given the nature of the shock, that spring and Q2 rebound can be quite strong as well. But to go from negative growth in Q1 to a strong positive Q2, Q3 outcome, you do need some, I think, up to $1 trillion. So anything below $1 trillion would be a disappointment for us.
Got it. And in terms of time and in terms of asset allocation, and then how do you see? I think you said that you think that the markets have run more than they should have, and maybe there should be some pullback just because of the factors which you mentioned in terms of an economic slowdown in the first quarter. What's your view on the US dollar and commodities such as oil and gold, both in the short term as well as the medium term?
So US dollar, we still see depreciation, medium-term depreciation trend, because there's so much dollar liquidity in the system which has been pumped in after the pandemic. The real interest rate differentials have narrowed against the dollar in the DM world. I think the EMs can catch up. And again, you will have to be very heterogeneous here, Some countries in LATAM have created a lot of output gaps, and even without a vaccine, they will recover because the restrictions have been so strong, and the capacity in spare capacity in the economy are quite high. So dollar liquidity angle, interest rate differentials, which have moved against the dollar, and the fact that EM growth naturally will come back is makes us okay that dollar depreciation can come through. But in the specifically versus euro, we are thinking of not a clear trend, because I think both central banks are going to be starting to ease. I think we are expecting a big package from the ECB in December, and also easing from the Fed. So both central banks are now fighting it out, and the impact is that a mixed kind of signal for the currency. But I think for some currencies in EM, especially in LATAM, the trend is clearer, because these countries did let their currencies depreciate a lot to buffer growth. They do understand the importance of a weak currency in supporting growth. And I think there will be a little bit more willingness to let that through as growth bounces back from very low levels. But a sustained recovery would need a vaccine, right? And this is what we were discussing earlier. So a little bit more nuanced view on the dollar. We are not of the view that dollar is going to be one-way trade down. I think there will be some, because the fact that other central banks, apart from the Fed, are also easing, you will have some phases of euro, for example, depreciation, then led by dollar depreciation.
And last time we spoke, you have been an oil bull, and you also expected a spike in oil prices to happen given the cut in capex. Do you still see it like that, and do you think that there could be a risk of a spike in oil prices because of production issues?
I think so. I think, of course, looking beyond this Q4 slowdown, because activity is down, so spot oil demand will be down, right? If you're all sitting at home, I think beyond that, all it does is that capex is not happening. If you look at the big oilers' plans, they are cutting capex at record pace. So this sets up for a spike, in my view, at some point, because the incremental demand does come from EM, and the fall in supply capacity is moving faster than the slowdown in demand. We can argue about fossil fuel and from a green perspective, and it's true. I mean, and those attitudes are shifting and changing, but they are slow-moving factors, while capex have been shut down very, very quickly and strongly. So this mismatch can happen. Of course, we'll have to work through the inventories, which will again rebuild because of this Q1, Q4 slowdown. But I think I still am in the camp that once we are post the pandemic and the vaccine is over, we do run the risk of a spike because of the supply situation, that we have cut supply much faster than we are bringing down demand. And remember, commodities are demand and supply game. People forget. A lot of people say, oh, everybody's becoming green and, attitudes are changing. Yes, but what is happening to supply, right? And commodities are very much demand supply driven. So, and inventories are the ones which make it very complicated as a forecasting, right, mechanism. So that's something to keep in mind as we move out of Q4, Q1, that, the supply side is under pressure.
Thank you. And what about gold?
Gold is simple. Real rates down, gold goes up. I think gold will probably remain quite strong. It has a very strong place in any diversified portfolio now, given where rates are and where our rates are likely to be. I don't think central banks in the DM world are going to hike anytime soon. And if any move in nominal rates come through, it's going to be through inflation break-evens, or at least that's what they would like it to be, which means that real rates remain negative. Right now, the real rate around -1% in the US is fairly negative, and it's quite strongly supportive of recovery. But you will need more negative rates for gold to keep on doing, especially if you look at the long-term charts. But I think in a diversified portfolio, it has a strong role to play because a lot of these things can go wrong. And I think a lot of people don't understand or appreciate that in the DM world, a lot of these policies are experiments. So nobody has seen them before. So that, I think from a diversification angle, I would really think that gold has a big role to play.
Thank you. Now coming closer to home, UK. Brexit is about to hit us. How do you think UK will fare and how things will pan out over here?
I mean, obviously, we don't have any political edge on to forecast whether a deal will take place or not. But if you look at the news flow, it seems like the differences are much narrower than they are made out to be. So there's a lot of obviously posturing happening, which is very difficult to make sense of from sitting from where we are. But I think beyond that, 2-3 things come out. UK is is a big beneficiary of vaccine because around 15% of UK economy is high contact consumption based, and UK will get the vaccine. Because they have obviously pre-bought a lot of doses. I think they cover the population twice or thrice over.
Oh, wow.
So they're a major beneficiary of that. Sterling is undervalued on many metrics. So we do think that UK after years of beaten down can certainly is well positioned for the vaccine, V of the vaccine. Of course, the risk is that you get a no deal. But right now, I would, given the news flow I see, I would keep it as a tail risk rather than a base scenario. Of course, having said that, there's no way we can forecast that. But one point I would mention is that there's not a lot of difference between no deal and the kind of Brexit we are getting in terms of the actual impact. This is really a hard Brexit. So it's just now about the paperwork and the transition period. So it's not disruptive, right? From a longer term perspective, there's not much difference between no deal and the hard Brexit we are getting.
Interesting. But you think that where the pound is and where the UK economy has been, it's still an upside scenario from where the
so because the services sector is a big part of UK. You have seen it in that the growth downturn was severe and the bounce back was less strong, and it's because of the nature of the UK economy. So UK doesn't benefit if China is doing well because we don't manufacture anything or export to China or something like that. So from a vaccine perspective, it does benefit quite a bit. And then valuation. I mean, valuations are pretty interesting in the UK right now. And then last but not the least is this rotation story from growth to value does benefit UK because UK is a value market, not a growth market.
Thank you. It's certainly a more positive view, and I'm happy to hear that things might be better with our assets over here. You mentioned China, and of course, you are a close observer of China, and it's a market close to you. And given what you described in terms of the EM/DM disparity in terms of vaccine, it seems from how you explained it that perhaps the significance of China for developing countries will become even more higher because that might be the only source of vaccine available for countries such as Pakistan and maybe other emerging markets. So how do you see? Do you agree with that? That the vaccine politics would help China, and secondly, how do you see the Chinese economy doing now?
So Chinese economy, Ali, is doing quite well. It shows you that the virus containment is the most important factor behind the rebound. So if you can contain the virus, you can go back to more than 90% of your capacity utilization, which they are. In fact, I think they're probably going to be the only economy which grows in 2020. Quite bullish forecasts coming out for 2021 as well, around 8% growth. We do think the risk is slightly to the downside because the economy is doing so well. The policymakers may ease the stimulus, especially which is coming from the fiscal side. I think the key risk for China next year in the Chinese economy is the default cycle. Once again, we are seeing some default cycle stuff kicking in. It's still very localized, and some parts of sub parts of the financial system. But that's something worth watching, because that may induce financial stability-based tightening, right? Which is not baked in the forecast. In terms of virus politics or vaccine politics, I think it's going to be important. I think it really depends on how quickly China can come up with its own vaccine as well. Of course, the transparency dimension is becoming quite important for this vaccine. So if the vaccine is not transparent in terms of trials and the safety record and stuff like that, that may have impact on the willingness of people to take it. So that's something remains an unresolved question, and we're already seeing that play out in DM world. As I mentioned, in the US, 50% of people don't want to take the vaccine.
That's very surprising.
Yeah, it's yeah, exactly. I was very surprised by that number, so that's something to keep an eye on. That you may get the vaccine, but people may not take it, basically.
Yes, and I was in Pakistan till Saturday, and I met a few textile companies, and what they were telling me was that orders are booming because of the supply chain disruption in India and also in Bangladesh. So a lot of Pakistan has been a net beneficiary from COVID, because of course our initial response to COVID was pretty muted. Like the virus didn't spread that much. Do you think that this can sustain, or do you think that India might get the vaccine earlier? And so what we have seen is that India, Bangladesh vis-a-vis Pakistan, it plays out on Pakistan as well. So what's your view on Indian economy's growth and the vaccine situation?
I think Indian economy, I think they will reboot the supply side. So I think, like we saw with the second lockdown in the UK, supply side is running now, right? There's no disruption of manufacturing. It's just high contact based shutdown. That if you're in the services sector, you can work from home, do that. But if you have to work and you're working in a factory, then you come out and do it, right? So I think that's where the model they are going towards as well. That's the trade-off they will have to do, which I think looks likely. So even before the vaccine, the supply side will come back in these countries. This is already happening. If you look at the PMI numbers from India, they're quite strong. So the supply side is coming online. And I don't think in the next wave of virus, even if they don't get the vaccine very quickly in 2021, anybody will now shut down the supply side. So it's a temporary boost. I think it will fade. So unless you can create your brand and price competitiveness, if you don't have that kind of pricing power or brand power or semi-brand power, I know a lot of these supply chains don't have branding, then this will automatically go away. So that's something to keep in mind. And I think the link of supply side to virus is now weaker now. I don't think any countries will now shut down the supply. I think that you can argue whether it was a mistake or not in the March, April side of things. We didn't know much about the virus at that time, right? So it was just the China model everybody was looking at. That's what China did, and everybody followed it. What happened in India was, for example, because of the rural-urban migration, it actually spread out, despite the fact the population is quite young. So I think that's something to keep in mind, and I don't think it's going to be anything to do with virus anymore. Supply side will run. So that's why the price signal to the external side of your economy is important, which is that right now the price signal is that importers are fine, exporters have to suffer. So, but you should never underestimate the price signal of exchange rate move. What is the exactly?
I would love to get your views on that. You've already alluded to that. So Pakistani currency has strengthened quite considerably, and it stands out amongst the emerging markets as a country where currency has strengthened. What's your take on that? As in, State Bank is saying it's market based. Do you think it is market-based? Do you think it's the right strategy? Do you think it's sustainable?
Look, when you say sustainable 3 to 5 year horizon, no, because Pakistan doesn't have the reserve ratios. It's easy to predict what happens in 3 to 5 years. You can't predict it, what happens next week or, what happens tomorrow. When you do not have reserve coverage, and Pakistan has one of the lowest reserve coverage in the world, and the currency appreciates, it is gonna it's gonna be disaster down the line. I mean, that's how it works. Whether it happens in the next 2 years, 3 years, I don't know. But it is disaster because we do not have the buffer. And if you do any kind of reserve ratio metrics, coverages, we are one of the weakest ones. Any country who has been able to run stable exchange rates needs to have stable reserve ratios. Yeah. So we don't even fulfill that basic requirement of a sustainable currency regime, if you will. So that's what I would share. Short term, I have no idea, what happens, but I know this is unsustainable as long as reserve coverage is very low, and Pakistan has one of the lowest reserve coverage in the world.
And you have Pakistan government has been planning to issue a euro bond and tap the international markets, and I think other emerging markets are also planning that. Uzbekistan, I think, was in the news for a bond issue. How do you see do you see what will be the appetite of global investors to a Pakistan offering?
Well, right now, look, hunt for yield is quite strong. People are looking for returns. So from that perspective, it makes sense. The only issue we have to think about is that a lot of emerging markets and low-income countries are calling for debt relief and asking for debt relief. Mm-hmm. That's something to be taken care of. That how you're going to mitigate those concerns of people who invest in it, and then at the same time, there's this ask of debt relief. So that's something which needs to be clarified. And then second point would be is I think when you're thinking about I was looking at the G20 communication which came out, and they're not that focused on it yet, and I think that's something which needs to be clarified, because we do know from a pan-EM low-income country analysis that a lot of countries have unsustainable debt ratios, and the question of official sector versus the private sector, those questions after a long time are coming on the table, and Argentina has been the main example of that. That if debt relief happens, then everybody may have to come on the table. So that's something we have to keep in mind, that external investor community is grappling with it, because everybody's asking for debt relief, and then if you're issuing a bond when everybody's asking for debt relief, then additional questions rightly so need to be asked.
Yes, you're right. And even in Pakistan, as I said, I just came back, and this was one of the topics which were being discussed in the policy circles, that we are asking for debt relief from the donor agencies and the DFIs and multilateral lenders, but is there any way of getting debt relief from private lenders, and what's the mechanism for negotiating that? So I didn't have the answer to that. Maybe you could.
But what interesting is that how can you issue a bond when you're talking about not paying them?
Yes. You're right. Like that, I think that has been like a confused strategy. But if I put it overall, it seems so this time. You seem to be much more concerned on the market's outlook and on the economy, and it seems as if because you think that vaccine will come in the second half of next year, and even then, as you said, that people's willingness to take the vaccine is fairly low, even in places where it will be available. So the first quarter we are looking into a recession, and in the US, because there won't be a new government until January, the government might not be able to provide as big as a fiscal stimulus before that to bridge that gap. So we are looking into a Q1 recession in the US. and so that's why you are more conservative on the outlook of the market in the US. And in UK, you think that things might actually improve because if we get a deal, and it might be a bad deal, but still, given where things are and where the valuations are, there might be upside, especially because UK economy is service driven, and UK will get a vaccine earlier than some other countries. And you said China has been growing. It's the only bright spot in terms of the economy which is growing, but that might lead the government to reduce the stimulus which they have provided to the economy. And you think India will recover, and India is on the path of recovery. So please correct me if I'm wrong on that assessment. With that, we are open for Q&A. So if you have more questions, please do ask, and I'll pass it on to Salman Bhai. And there is a question which is from Taha Javed, and he's asking that wouldn't India get the supply first because it's all of the vaccine, because they're one of the countries which is producing it?
It will only once those. It depends when the generics will come through. So it's not going to be immediate. The first batches are already pre-bought. So unless the Indian government stops it, obviously then you're getting into politics of it. Those manufactured are already sold. Because remember, the DM countries gave upfront guarantees to these pharma companies to go ahead and invest in R&D. They were guaranteeing orders with 50% efficacy. I think if you managed 50% efficacy, you would get a preset order of millions of doses. That's the economic certainty which incentivized the vaccine production. So, but if it moves into generics, then potentially yes. But again, this is not a 2021 story for India from a mass vaccination perspective. It's really a 2022 story.
Thank you. And there's something which you said which I think was very wise, and I don't hear much of that, at least in Pakistan. The realization that a lot of the economic policies which we are seeing around the world are experimentation, and they might be correct, they might be wrong. Nobody knows. We are in uncertain territory, and from that perspective, you said you like gold from a diversification perspective because what if things go wrong, and there are chances of things going wrong. And I know here you are talking in personal capacity and not with the hat of your organization, your new organization, but Fidelity is one of those funds which has been talking about Bitcoin and cryptocurrency from an asset allocation perspective. What are your personal views on that? Do you see that as a part of asset allocation perspective as well? And I'm totally conscious that you're talking from a personal perspective only.
No, I think this is something, frankly speaking, I personally don't understand that much. So, historically, again, in a personal capacity, I've questioned that some of the financial engineering aspects of it, especially the deployment of leverage in that segment. But gold, I understand, and even though gold, like Bitcoin or anything else, doesn't have a like a economic role, but how the from hundreds of years of practice, what role it can play. So I think they are probably, even if extremely they are very similar, I would just go for something which I understand, and it's statistical distribution. For example, I have an anchor on, especially if you are hedging for something which goes wrong, if you're really hedging for the tail risk, you would need a Wi-Fi to transact Bitcoin. I don't think you need that for gold.
Right. Yes. Totally. But do you see from your perspective where you sit, do you see institutions now taking cryptocurrencies more seriously?
There's a lot of there's a lot of discussion and interactions now, which is much more so than last time around. That's for sure. But I think the jury is still out, at least from my personal perspective, and then it really depends on the increasing maturity of this, if we can call it an asset class, increasing maturity of this segment, if you will.
So the last question from my side, you interact with Pakistan as well, and then I know that when Pakistani government, when they issue bonds, etc., they interact with you. What's your assessment of the situation in Pakistan, both in terms of the quality of the managers, in terms of when you talk to them, do you get a sense that they have a good strategy, and do you find them as credible in terms of a place where you would any foreign investor would park their money in? And I'm talking more from a bonds perspective. So do you think Pakistan has a good strategy vis-a-vis in comparison to other emerging markets you look at?
I think our framework of debt markets is on the weaker side compared to other emerging markets. I think it's probably an HR issue as well. And I guess I would leave it at that, really. I mean, there's a lot to be learned from other countries when it comes to thinking about debt markets, the infrastructure around it, the framework around it. There's a lot of low-hanging fruit, especially in the local debt space, which Pakistan can benefit from, but we don't see any movement on it. So the understanding is pretty basic, which is sad to see. There are a lot of
Which countries do you rank higher in that basket of similar countries?
I mean, basket like me, they don't have to go far. I mean, they should look at what Egypt has been doing, right? We also have this connection as well with Egypt previously, but we don't see that translated into the mindset, if you will, and then the low-hanging fruit of logistics and infrastructure being built. You can look at Turkey, for example. I know Turkey has gone through a very, very tough time economically. There were political reasons as well around it, but they have infrastructure in place. The policy-making machinery is very strong. So the reason why Turkey came under pressure was because of politics, not because of lack of infrastructure or support mechanisms. I mean, it's a very sophisticated market, and these are easy things to do. In fact, the tougher ones are politics, actually. So a lot of the EMs, our frustration is the political cycle, diverges away from economic cycle. That's where we spend a lot of our time on. In Pakistan, it's a much more basic problem. All right. I mean, even the infrastructure is quite weak, and it's a HR issue as well.
Disappointing. Especially, I was having a conversation in Pakistan with the CEO of Pakistan Stock Exchange, and he was saying that in the 90s, when they started doing roadshows with Pakistani companies for privatizations, foreign investors thought that the quality of management and the quality of processes and the systems in Pakistan were far superior than India. This is before Manmohan Singh started the reform process in India. So the regression in the quality is certainly disappointing. There's a question like, what's your view on the flows in emerging markets? And I suspect he's talking about the asset allocation flows, developed market versus EM. We have seen a lot of emerging market funds see outflows and shrink, especially in the frontier market side.
Yeah,
that will continue.
I think frontiers will continue to remain under pressure. I think now the question is for the main DMs to get the flow back, because the major EM, if you look at the big EM countries, none of them are a default target or asking for relief or anything. I think that's where the safer, high returning bet is, and they do yield a lot. So unless the frontier market has to yield, you have to give a lot of premium, and the fact that the risk of debt relief is on frontier more so. So I would expect frontier to diverge away from major major EMs, because the major EMs are expected returns are quite high, and there is no tail risk that any one of them will go default in the next 3 years.
There's a question from Kareem Punjani, and he's asking that do you think Pakistan can still see hot money flows where because developed markets have 0 to 1% interest rates, and also the currency risk is low in Pakistan? So, and I'm assuming he's talking about local currency because he's talking about currency
Yeah.
risk.
I think the competition this time around is going to be high, is going to be stronger. So because you don't have to compare Pakistan just with DMs, you have to compare it with other EMs as well. Um, and um, and and for hot money flow, of course, the short-term stability of the currency is quite important, but that's why it is hot. The moment your currency becomes volatile, they will leave and exacerbate the volatility. So you have to be careful about that. But I think the competition this time around to attract capital is going to be stronger compared to when it was last time, because last time when Pakistan came in, rates were very, very high, as you remember. And the rest of the EM worlds were either reducing rates or the gap between EM and Pakistan was quite sizable. It's not the case anymore. So unless it reappears in a big way, I would expect much more muted reaction this time around.
Thank you. Another question from Danish Lakhani, and what he's asking: what are the three things in the order of priority which you would advise the Prime Minister to revive the economy in short term and the medium term? And I suspect you've already perhaps told this to the Prime Minister, but would love to hear the three things which you think, in terms of the top, should be the top priority for him.
Look, short term, I have no idea, frankly speaking. I don't cover Pakistan that closely to have a view on short term. Medium term is clear. Sometimes medium term issues are much clearer to speak about. It's clear that Pakistan needs to have economic priority hardwired across all institutions, because if we are not an economic power, we won't be able to do anything else. And that means, the role of the banking sector has to be reassessed. The role of the different interest groups which come through have to be reassessed. Ultimately, we need to know what kind of power or regional power we want to be. And I think if right now, as you go through, economics is not the foundation of it. We talk about it in a short-term sense, but not from a medium-term sense. So that I know it's a bit vague, but it's an important point that Pakistan has not really put economics at the economic stability as at the forefront of its most important goal, because that stability actually can feed through everything else. And once you make that the objective function, then it's easier to solve other problems. Because you know where you are heading. So however, if you don't know where we are heading, then it becomes a problem.
That's number one. What's number two and number three?
Number two, number three. I think it's probably a longer discussion. I have to run through now. But yes, I mean, a rethink of the FX regime would be an interesting one to put on the table.
You didn't mention this time you're not mentioning China in terms of
I think that's linked to number one, right? I mean, if you are going to put economics at your forefront of your objective function, then linkage with China needs to be reassessed within the context of the moving geopolitical situation. I think one thing which I can share with you on US China per se is that more and more I engage on this topic, I think the Biden administration will be as hawkish on China. Maybe in a different way, in a different style, but it's going to be as hawkish. The mood music will be different, but I think in some ways it's going to be much deeper fracturing. The issues where these two superpowers differ are deep, and they are substantive, and they are real. And this is something Pakistan will need to think about, because once again, our geopolitical situation is such that we are potentially going to be in the middle of it. And that goes back to the first point I mentioned. If our economics is our priority and our objective function, then it has to be looked through that lens as well. So that's a more medium-term focus, but we'll have to stop the firefighting first. And unfortunately, I'm not an expert on how to stop the firefighting.
No, neither are we. But you're totally right that the understanding that the economy has to come paramount and amongst needs to be there. And it somehow it's not there. The focus is not there. So the last question, and it can be a big question, so that's why I'm leaving a lot of time for it, is that, what are the sectors which you like where somebody should position for the short term? Short term means like 6 to 12 months. Last time we spoke, I think you alluded to value. You think that value stocks might do well. So
I think COVID reopening trades can do well. It may be volatile in the short term because of this Q4, Q1, but I think the valuation buffer is quite strong, and this theme can run. I think another thing is that you have to also think about the regulation issues which can potentially come in the US on tech. There are two topics which there is bipartisan agreement on, is China and technology. so I think we may, people often tell me, oh, this rhetoric and nothing happens, but if you listen to the mood music, sometimes when it happens, it won't be that surprising that you have been listening about it for so long. So that's something to keep in mind as well, especially with the big techs.
So avoid tech. What to like besides COVID opening?
As I said, I think some of the reopening trades can be quite interesting, and like airlines, for example, some of the travel leisure stuff which has been really come under a lot of pressure. Banks in Europe, for example, that's something we are looking at. And then there's a regional dimension as well. For example, in LATAM, for example, there's a lot of cyclical exposure, commodity exposure, which you can get. So that's something to look at. However, as I said, it's not going to be a straight line. You have to be very cautious about these things because the vaccine deployment is the key one, which we have to watch. But the valuation of all these things, as I mentioned, are quite, as you guys may know, are quite supportive. And if reopening is coming, these sectors are the major beneficiary of the delta of the reopening. So that's something to keep in mind. But it's going to be volatile year. I think 2021, I think where I find concern is that everybody is going that, oh, it's going to be fantastic year, right? Because the vaccine is coming. There are many steps to go. It's going to be multi-month process. Having said that, markets are forward-looking, so that's something which makes them fun, right?
Yes, no, I think the view in Pakistan certainly is not that optimistic. I think as a bunch, perhaps we've become much more pessimistic and grumpy. So, the optimism which the global markets have regarding the vaccine coming, I don't think the Pakistani market has the same view. It hasn't rallied while the global markets have. And I totally agree with your view on tech. And in fact, I'm planning a webinar with Jonathan Tepper, who wrote a book on this topic on how big tech.
Yeah.
So inshallah, I think in the first week, end of November or the first week of December, we'll be hosting him for a webinar on his book on how tech is becoming a monopoly and how it should be broken down. So I think you will like it.
Timely topic. I'll definitely sign.
Listen
in. But I have to run now, Ali bhai.
Yes.
But
thank you so much for your time.
And thank you to all of you for listening and sharing your questions. But love to reconnect in the new year. So well done, and thank you very much. And thank you for all your work you're doing, Ali bhai. Really appreciate it.
My pleasure. Thank you for your time. Take care. Khuda Hafiz.